Your market news now. Earlier, the rand weakened against the dollar ahead of planned protests by the EFF party. At the time, it was trading at 18 rand 43 against the dollar, a 0.1% weaker than its previous close. Analysts say this constitutes a risk event for the country and could harm sentiment on South African markets if the outcome is bad. Meanwhile, emerging market stocks fell, with Hong Kong shares hitting 3-month lows as UBS's bailout of Credit Suisse did little to stem fears of banking sector contagion. Ahead of its interest rate decision this week, the Fed is now expected to keep its key lending rate unchanged at the end of its 2-day policy meeting, and a stark contrast to last week's bets of a 25 basis point hike. To talk to us about this and more, we are joined by Gary Booysen from Rand Swiss. Gary, thank you so much for your time. I mean, touching on what I've just said about the rand a little bit earlier on, how are you describing local market sentiment in light of this national shutdown that is taking place in different parts of the country?
Well, it's very difficult to differentiate the sell-off that we're experiencing today from international factors like you mentioned, UBS and Credit Suisse, and how much of it is being affected by the local shutdown. What I can say is that we're well off the lows. This morning, we're around, maybe 0.75% lower on the all-share index. We're now actually up almost 2%, and I don't know if that has anything to do with the shutdown that we've seen so far, but potentially those fears not materializing, or maybe a little bit of optimism just creeping into global markets, because we've got the FTSE up a third of 1%, we've got the CAC in Paris also up or almost 1%, and the DAX in Germany also up about 0.5%. So you can clearly see that global sentiment is starting to shift from that very, very negative start that we had this morning. And it's not helping our local currency at all, which is still sitting at 18.50 to the US dollar. Looking at the gold price, which is also, I suppose, a measure of international sentiment as people look for that safe haven, as this banking crisis unfolds. It did head above $2,000 an ounce earlier today, but back to about 1983. So, a little bit off the lows, but certainly just a lot of fear out there in the market today.
So with this banking crisis and what we're hearing here with a rescue deal for Credit Suisse and an effort, obviously, by the banks to restore some kind of confidence, what are the questions or concerns that you have still at the back of your mind around the situation?
Well, there's a couple. So Credit Suisse was always a bank that I suppose was in a bit of trouble ever since there's their legacy issues with Credit Suisse, and you can see that in their CDS, which is essentially a measure of how much it costs to insure their bonds, as well as their share price performance over the last, say, 3 or 4 years. You can see it was a bank already on the ropes. So the idea that we've stemmed the global banking crisis that we're talking about, because UBS is going to step in with a share deal to acquire its biggest rival, and make essentially a mega bank in Europe with around just 1.5 trillion in assets. That doesn't really address the root causes, because what we've seen at Silicon Valley Bank, what we've seen at many of these banks is really it's a mispricing of the interest rate cycle more than anything else that has led to these kind of banking failures and the run on the banks, and the reason that the central banks have had to step in. Now, that's not really contagion. It's not that people are holding Credit Suisse paper or SVB paper and it's rippling through the financial system. This is something that seems to be affecting all different banks independently. And I don't know if we've yet seen the end of this banking crisis, just because we've seen essentially, I want to call it a rescue. It's not a bailout, because it does have commercial benefit from UBS, but a rescue of Credit Suisse. That doesn't really end the issue. What does happen, however, is that obviously with the SNB, the Swiss National Bank, the regulator stepped in, and they ended up wiping out around $17 billion of Tier 1 capital, which is risky debt capital that the bank obviously holds, but the shareholders to an extent have been protected by the deal with UBS. So it's kind of thrown into question just the risk structures. Shareholders should be wiped out first before bondholders are impaired, and that hasn't happened, and that's caused all sorts of panic about how central banks are going to step in and rescue any other banks that might fail in future. And we've already seen regulators coming out today to specifically the ECB coming out and saying that this is not going to be standard. This is not how how you rescue a bank. So still a lot of confusion, a lot of fear out there in the market, and you can see it in our underlying indices. So all share index up. Okay, at the moment we're up 1.5%. The industrial index up 1.8%, the resource index up 3.73% at least, and that's the gold miners really doing the heavy lifting. But our financial index down 1.3%, and that's just showing that it doesn't matter where the banks are, even though our banks are very well capitalized, very, very profitable, as all the recent banking updates have shown. There's still fear. Anything that looks like financial services, anything that looks like banking, traders are marking down today.
All right, Gary, unfortunately, we have run out of time. I would have liked to know your perspective in terms of why does it leave, I suppose, the Fed and other central banks, because, some commentary has been perhaps we might see the Fed pause. However, we are going to leave that conversation and we'll pick it up on Wednesday. Of course, we do have the all-important interest rate decision, whether we'll see a Fed pause or we'll see them stay the course in light of high inflation. However,